Muchas gracias. Equipo 2, ¿algún representante, por favor, comparta pantalla y ponga su presentación? Tienen 10 minutos. Cuando arranque a hablar el primero, empiezo a correr el tiempo. Cuando quieran.
Good evening, everyone. We are Federico, Gonzalo, Juan, and Gonzalo, and we're here to present you our valuation for Vista Oil and Gas. We have arrived at a one-year target price of $3.34. This offers 35% upside from November 10th closing price of $2.48. Vista is an upstream company engaged in exploration and production of oil and gas, focusing mainly on areas located in the geological formation called Vaca Muerta in the Neuquén Basin. But why buying Vista? First, the favorable international context. Second, its competitive position. And lastly, its consistent financial performance.
We see three drivers for the international context: the world economy recovery after the COVID pandemic, the expected increase in oil demand, and the rise of international oil price. The COVID pandemic struck and all the financial markets around the world suffered. The oil sector was one of the most affected by it. The oil prices and global demand dropped to historical low values. Some strong vaccine candidates are in production, and it's expected that COVID pandemic will soon pass. Some scenarios lead us to think that the global oil demand will increase, and OPEC's forecasts show the same. On the other hand, we have Fed has cut the rate to zero. So it could mean that US dollar will weaken compared to the other currencies. And historically, when the dollar weakens, commodities price, such as oil, increase. Vista has become the first exporter of Argentina, and it's also the fourth oil producer in Argentina. Vista competes by reducing lifting costs. Most of its based in the reduction of the price between fractures of new paths. Vista current production is over 25,000 barrels a day. We must consider that Vista has suffered the COVID crisis, and it is so the process of transition from conventional to non-conventional assets, and well path will be for non-conventional. Next, please.
Sorry. Comparing Vista performance with the main local oil companies could lead in one conclusion of poor performance. Since Vista is an upstream-only company, YPF and Pan American Energy are the key players in the domestic market, but they are integrated companies. To compare Vista, we have considered other upstream companies from Latin America, like Geopark, Enauta, and PetroRio. But again, this company is some different with Vista. Geopark is in fact the most comparable company. Other factor to consider is the listing cost, where the market generally takes YPF as reference. In the past, Vista outperformed YPF, but this changed in the last quarter of 2020. By our estimation, Vista have a big increase in sales in 2021, but the growth curve will fall, converging to a 5% growth. To understand the evolution of the sales and the performance, we must focus on the P by Q analysis. We determine three main growth drivers: the price, P, and the CapEx, which determine the quantity Q.
Regarding to CapEx, we base our analysis in four main criteria. First, the development of new shale oil wells. Second, the conventional production maintenance. Third, new facilities. And fourth, the investment commitments with the local governments. Based on our estimation, Vista will carry out a CapEx investment program of $1.2 billion within the next 5 years. Within these CapEx scenarios estimated, there's a trade-off being generated between conventional and non-conventional production. We project a reduction of the lifting cost up to $7 by 2024.
This can only happen if the price P are favorable for the company. We decide based our analysis on the prices forecast made by the USA Energy Information Administration. Based on the three variables, the company could have a quick recovery of the operation margin. In conclusion, Vista is an intensive capital company, and the profitability depends on a strong investment. Vista levels of liquid cash allows them to get through of a year of high volatility. Sorry.
For ESG issues, we have used a specific guide from Principles of Responsible Investment that centers on ESG fracking issues. The company engages, next please, the company engages in fracking in order to develop its non-conventional assets. This can bring several ESG risks. The company does not disclose any precisions on environmental related information, which leads to a negative grading in this section. Next, please. On social issues, the company has a good workforce policies, but does not disclose stakeholders' involvement. Next, please. The company has a policy regarding the independence of its board and committees, which, along with shareholders' rights, brings to a good grading on the governance section. The aggregate compensation paid to the directors and management during 2019 was around 10% EBITDA. However, management compensation is not linked to any performance nor ESG metric, which affects the valuation in this section negatively, along with the possible share dilution due to management incentive programs and the company's warrants. Next, please. The company's main controversy is the ASUPA trial, which is an environmental damages trial being held against the Vaca Muerta operators. We have subtracted environmental information from this trial from the Vista's presentation. This highlights the importance of environmental considerations on the valuation. For the ESG integration, we have applied a beta modification integration model, integrating the ESG with the rest of the model. Then we have adjusted our beta by 5% for ESG issues. Next, please.
We base our analysis in three main macroeconomic scenarios, taking into account the Forex gap, country risk premium, economic growth, and the restriction to access to Forex markets. We also consider three scenarios for oil and gas price. Our target price calculation is based on a mix of discounted cash flow to the firm model and two relative valuation models. The relative valuation allows us to capture the regional landscape in which Vista operates. In addition, with the free cash flow to the firm model, we were able to capture the intrinsic value of the company considering the particular that it has, the macroeconomic scenarios and the oil prices. Due to Argentina's economic volatility with the country risk premium and the effect it has in the debt cost, we decided to use a multiple wipe approach. To calculate the cost of equity, we use the capital asset prices model adjusted by liquidity and country risk premium, and also affected by our ESG analysis. In the case of cost of debt, we use the corporate bonds that the company already issued. Based on compared peers, we select the optimal capital structure.
Here, we estimated the future EV to EBITDA ratio of 4.59, which translates in an estimated price of $5. And we estimated the EV to P ratio to be 5.4, which results in a price of $5.38. We have contemplated several risks, but we'll split them in three main categories to cover the most important ones: Argentina's regulations, local macroeconomic risks, and international context. There are heavy restrictions on foreign currency acquisition in the country, and at some moment, heavy restrictions were implemented, complicating debt payments. But now there was a turn in that regard, allowing to hold export proceeds and allowing repatriation of investments. Both the country risk and the FX gap have shown a strong negative relationship with Vista's stock price. This poses a huge risk for Vista, as it heavily depends on Argentina's macroeconomic stabilization for it to thrive. As we see here, as soon as the government took more market-friendly policies, the pressure to the financial FX rates stabilized. Considering that Argentina's production is atomized and that the government doesn't control 100% of the process, we foresee that an FX gap higher than 100% is not sustainable. Vista is highly sensitive to international oil prices, but EIA's forecasts show that they may be increasing, reducing the probability of this risk. To see how robust our analysis was, we conducted a Monte Carlo simulation, and the results that emerged from it alongside with our analysis show that Vista is being traded below its potential price.
For the change in global and domestic context, for their strong competitive position, and for their strong financial performance, we strongly believe that Vista is still undervalued. Therefore, we issue a buy recommendation. We want to thank you all for your time. We are now at your disposal to answer any questions or concerns that you might have. Thank you.
Perfecto, justo a tiempo. Muy buena presentación, chicos. Felicitaciones.
Gracias.
Ahora le damos un minuto a los jueces para que piensen preguntas para ustedes y cuando el primero esté listo para preguntar, vuelvo a poner el timer. Muchas gracias.
I have a question. Thanks for the presentation. It was very good. Well done. My question goes related to the investment side. This is not only a company; it's an industry that is very investment intensive. But what you show on the charts is that this company, in the last few years, had negative cash flows almost systematically throughout the year. And do you have a word about the source of funding for this company, given the fact that I understand this is a company that is already in debt significantly as well? I mean, it has high ratios of debt already, and going forward, in order to finance all this growth in the production, it would probably need new sources of funding or to improve significantly this cycle of capital intensive negative capital and source of funding. How do you see that cycle, and what are your thoughts on that?
Oh, thank you very much. That is a very good question. For starters, we know that the company has an important cash position that we estimate that it is enough to sustain about 1 year of production. And we also know that the company has successfully launched new bonds and is in the process of restructuring some of its debt. However, we know that in the case of needing further financing and experiencing further financial difficulties, we estimate that there could be a case of potential share dilution, and we have a slide for this, and there could be a share emission, which could mean in the future potential share dilution for the shareholders.
And I would like to add to what Guido said, that it's true that it requires strong funding and it has many needs for funding for the future. This is why it was important for us to show how some of the government policies turned a little. It's still far from a market-friendly government, but a change is being seen right now. And we're hoping that such restrictions as the one this year that forced to refinance 60% of its debt will not happen again, as they already shown with some central banks regulations that they will enable to obtain funding to maintain export proceeds and repatriate investment. So that was a good change from the government, and that makes us being hopeful for the future.
Great, thank you.
I have a question. We have seen a very aggressive cut in terms of lifting cost for Vista, and the main objective of the company is just to be competitive by reducing this lifting cost further. And in your presentation, really the reduction going forward is still very aggressive. Have you had the chance to compare what is the lifting cost that the company is introducing to the market as an objective, and if it is doable in terms of reducing further the lifting cost?
Yes, it is doable. What we've seen is that it has been continuously decreasing its lifting cost. In calls with management, they have manifested their intention to reduce it up to $7 by 2025. also, we've seen an increase in the lifting cost by the third quarter of 2020. And we have asked that to the management, and they have argumented that it was due to the pooling cost.
The pooling cost, yes.
It was due to the pooling cost, which it was due to the post-COVID pandemic, which not normally happens.
We also believe that this is actually doable because of Vista's attraction to talent. As one of the main important factors in Vista is that Vista has a proper good governance, and this allows them for this technique we described before, of this special technique of drilling between wells, and this allows them to gain further productivity, thus lowering thus lowering this price.
Thank you.
I think what Gonzalo and Guido says, Vista now is, for the new wells, is reducing the space between fractures. And that's allow to the company extract more oil and for the same cost. So we increase the Q, and that low the lifting cost.
I have a question. I thought, well, you base most of your forecast in a very favorable international context, and I want to know if you can explain with a little more of detail the cost structure, and which is the learning curve in the cost impact in the model that you prepared.
Yes, we assume a favorable international context, but we took EIA's forecasts both for their base case, bullish and bearish scenarios. So even though our base case is a favorable context when compared to now, we actually had a bearish scenario for the international context, where oil prices and gas prices increased very slowly and were over today's prices only by 2023 approximately. So we have weighted all of that, all the different scenarios. So it's not all bullish. We were pretty conservative in some regards, and international context, we leaned on forecasts from EIAs.
Any further questions?
Yes, please. I have a question. Have you considered in your models, in the worst case scenario, the prices of oil going down internationally regarding all the energy transition that is going on in the planet?
We forecasted prices going down in the short term, but in the long term, they ended up being stabilized for levels above our current prices. So if we see one of our slides with international oil price forecasted in the bearish scenario, it will decrease and it will only reach today's numbers only by half 2021, by the end of 2021. And from then on, even our bearish scenario has all prices above today's.
Well, also, let me add that your concern about the new energy matrix was included in our report. Actually, we included that as a risk, but as a risk in the medium to long term, but not in the short term. So yes, we see that that could be a threat to the company, but not an immediate threat. We also, in that regard, we also noticed the new sort of investor profiles that could
Un minuto.
harm Vista's capability of acquiring capital?
Okay, so you in your projections, you think that oil is going to be above 45 in the future?
By the end of 2021, yes. In our very scenario, it goes below that price in the short term this year and up to the end of next year.
And let's say in the next 10 years, you think that that's a low in the price of oil. And why is that?
Well, first of all, the average of oil price in the last 20 years was around $60. So statistically speaking, the numbers make sense. Secondly, this was estimated by US Energy Agency. So we took their forecast and we applied them into our valuation. We took the most bearish scenario from them, the most bullish, and their base case.
Tiempo, chicos.
Okay, thank you.
Thank you.
Congratulations, very good presentation.
Thank you very much.